The mining sector will have to look for new markets and users of minerals to sustain growth in the industry. That's the word from the Mining Forecasting Conference underway in Johannesburg. Delegates heard that the mining sector is facing a very challenging environment, which increases the need to forge ahead with modernisation. Let's take a look at that story.
The Chamber of Mines says the sector made a 37 billion rand loss last year. This as it continued to battle low commodity prices and weak demand. High input costs have been another sore point, with higher electricity and labour payments.
The issue is that when you have 20% to 25% price increases over an extended period like we had in the 5-year period up until 2014, suddenly you have costs in gold mines going from 12% of the cash costs are electricity. They're now sitting at 24% of cash costs are electricity. So those pressures have created huge problems for the companies to absorb. And that's why we've been strong advocates of a slower price path on the electricity front, and also having a view of what the future electricity price path will look like for the country as a whole. Other big price increases or cost increases have come from on the labour side. Labour costs in the average 5-year period up until 2015 have been increasing by 11% per year. And productivity in the industry, and it's not just labour productivity, entire productivity, capital labour has fallen consistently for about 10 years, with some exceptions.
Economist Peter Lopsha says the weaker currency will continue to put pressure on the sector. The rand is forecast to depreciate further against the dollar on the back of possible higher interest rates in the US. He says the rand will likely end the year above 15 rand against the dollar and reach about 16 rand to the dollar by 2018.
The main driver there will be higher interest rates and a stronger dollar in the US. However, it's slow increases in interest rates that we expect. So there will still be a capital flow from the advanced economies to emerging economies like South Africa. So that will contain other pressures on the exchange rate depreciation. So we're looking at a moderate further depreciation of the rand. We also think that there will be, given the uncertain political environment, and we've seen the volatility as a result of events, that may impact as well over the short term. But the key point is it's a gradual depreciation from where we are. The rand is already at 14.70 at the moment, going to 15.17 by the end of next year.
Lopsha says some inflation moderation is forecast for next year. This could mean lower wage settlements, which could assist mines with cost pressures. Gloria Stefako Musi, SABC News, Johannesburg.